Square, certainly one of them. Those shares are under big-time pressure. Worst day in more than a month. This is after Raymond James downgrades that company to an underperform. We've made it our call today. You see it there. They say, hey, great company, not so much a great stock right now. What do we think?
Well, the stock is up 25% year to date, and he had a market perform on the stock. So there's that. It's trading at 95 times earnings, so then there's that, right? So, I mean, it's had a nice run, and if he's right in terms of the organic sales having peaked, that's not a good combination with this valuation. I own PayPal, and I'm uncomfortable owning that, and that's only at 35 times forward estimate. So I can understand it. I've not been involved, but I get the call if he's right on the top line slowing.
24% in a month for Square. If you look at it versus the competitors, you say PayPal, okay, you know, I got you. PayPal's up 9%. And the interesting thing today, and you guys can take them as individuals, or you can look at it in total, just looking at the calls over here. Forgive me for looking away. MasterCard and Visa, AXP, all getting upgrades or initiated positive today.
MasterCard's the best name in the group. I own it, so I'm slightly biased, but I think the report lays out exactly why. It's got defensive characteristics. It's outperformed massively, whether you're talking about the bear market between 07 and 09, where it bested the S&P by 44%, or you're talking about recent episodes of volatility in the market where the stock barely budged while so many other companies, tech, financial, consumer, all went down 20% or more. This is a defensive name that also happens to have massive growth opportunities that are secular, does not require 3% U.S. growth or 2% global growth to come through. And then you think about some of the innovative companies they've been buying. And you think about some of the ways that they're going to enable the world to transfer cash and credit to each other. That has nothing to do with credit cards, the physical card. So I think there's a lot to like here. Warren Buffett agrees. This is a name that I've been in forever. And if I have to own a payment company, I'm not looking for the one that just came down the most or the one that has something to prove like American Express. I want the best name, and that's Master.
So third time I'll agree with him today, which is like a record.
We better leave now.
I know. Let's go. No, I like MasterCard and I like Visa too, and I like them exactly for the reasons that he just articulated. The other one that I really like is there's no credit problem here. Like if the consumer does go down, you don't get the credit issue that pulls down some of the others like a Synchrony or an American Express. Here, it's a pure play fintech. You can add to that as an option value with a company that has real secular growth.
I also want to point out, I think it was last week, maybe the week before, Fiserv made an announcement that they're buying First Data Corporation. That caught my eye, all right? There is going to be consolidation in this space. And when stocks like this get knocked down, like Square in particular, I think that may draw in some buyers because it's going to be a condition in fintech where the mighty survive. The bigger are better.
Square should be in the same portfolio with the cards because when this thing gets whacked, the volatility is crazy. I own all those names, but not in the same portfolio. Square is a crazy chicken because if you get a downgrade on it or they miss a quarter, you lose 30%. And 96p is insane, but it's a player, so you want to own it in a much more, aggressive portfolio. The other stocks are defensive in my view.